Hi, this is Randy Finney with Right Side of the Chart, and today's Tuesday, November 14th, 2017. It's 10 o'clock Eastern Time, so the market's been open for about half an hour. I wanted to go over just some of the things that stand out today. I'll keep this quick, and just keep in mind, I'll sometimes post this on the front page along with a video. You can increase the playback speed in these videos, really cut down on the time. Just go to the settings there and increase the playback speed to either 1.25, 1.5, and really, like I said, cuts down the time on the videos. But I'll keep this one short. There's not a lot to cover, although I did want to touch on gold. I haven't talked on gold for a while. I'm starting out here with ACBFF only because a lot of folks within the trading room and on the site have owned this stock for a while. It's been my favorite cannabis stock all along since really getting into the sector a couple of years ago, and I did post this morning, and this is what I wanted to share with everybody. We had a member, Gaucho. He asked where the next fib cluster is, so I put up this chart within the trading room, and this was before we opened up today. We could see the stock was trading up, or I could see it trading up in pre-market today. And so here's the next fib cluster zone. We hit it. We opened and ran right into it, and that comes in right around 525 roughly to 536. You can see it there, and again, that's from this fib right here, this Fibonacci projection, as well as this one. So I colored one yellow, one white, and you can see again these are clusters. I got rid of some of the other ones, and the next one's all the way up there. You can see it way up there, about looks about 720 to 750 is the next one. But again, I posted in advance that I'd be selling my shares there in that zone, and that's what I did. We popped up there, and I'm out. Just I had to go through several accounts. So I don't have for the first time in gosh, going back to when I first highlighted this stock and bought it down, started buying it at 55 cents. I think that was back here. No, that goes all the way back here. I'm out. Anyways, you guys do what you want. Congrats to those that caught it. If I zoom out, you can see the next fib clusters. But just again, based on the pattern measurement, the width of this pattern, everything else, I'm starting to see there's still the momentum in the marijuana stocks, the cannabis sector now, although it's slowing a little bit. And again, this is not really, well, somewhat of a gut feel, time to get out, as well as, again, technical measurements and looking at these fib clusters, how much the stock has run and everything else. All right, let's not talk on that much more. If you guys have any questions, for those of you that remain long, are looking for more upside, by all means, feel free to shoot me questions. Personally, I'll look to re-enter. I'd prefer to re-enter in a pullback. But if the stock, continues higher at some point, maybe it consolidates, puts in some support levels, maybe it makes a bull flag pattern, bull pennant, any type of continuation pattern, I'd have no problem entering the stock at higher levels. I just think it's gone a little too much too far. This is about in just the last, what is it, 19 days here? Yeah, not even 19 days. The stock has rallied over about 150%. You can see there. So, all right, moving on to the next one, gold. Let's talk about the Euro US dollar because that's largely been driving my analysis on gold. Well, for quite some time. And this I haven't updated in a while, but we had this uptrend line in the Euro US dollar breakdown. Everything I've covered hit my first target, bounced to the bounce target zone, fell just a little shy of my final target zone, but we're starting to move up pretty impulsively. So I added a downtrend line here. This is new. It's not super well defined, but there's a few reactions, and we may have a reaction here. And if you put a parallel line down here, roughly parallel, that gives you a price channel. So let's just keep an eye on this. Trend indicators are still bearish. The PPO is down below the zero line, although it is pointing up. Made a bullish cross recently. The RSI you can also see is moving up. Um, and just simply being that we came so close, that may be enough. Now, as importantly is this weekly time frame. I haven't talked on it in a long time, but this I've been covering for years. And there's also, if you flip this chart upside down, you look at the dollar. Here, I'll show you DXY just to show you what I'm talking about. Oh, DXY0. There we go. No, DXY. Huh. Okay, they must have changed symbols here. Okay, so apparently, I guess I hadn't checked it in a couple of weeks, that TC2000 has stopped giving a feed for the US dollar index. It used to be DXY0 was the symbol, and forever and a day I had a chart. Well, the good news is I use no less than 5 different charting services, so I'll just flip over to stock charts. They use USD, $USD as a symbol for the US dollar index. And what I wanted to point out here, let me just move try to get this whole thing on here so you can see the dates down below. This is a 20-year, over 20-year chart of the US dollar index. And what I wanted to point out here was this consolidation pattern here over the last few years, all the way back from 2015, actually goes back for several years. And most importantly was this divergent high up top. You can see the divergent high right here. Oops, wrong tool. Let's try to get a line tool here if I could, and click on that. So there it is. You can see the negative divergence, big, powerful negative divergence. And this chart I've had for a while. And it shows you all the other divergent highs. You can see them marked, and you can see the red arrows. What happened each time we either had a negative divergence on the RSI up top. You can see this was just an overbought reading. That's what the red indicates, overbought. It's not, the arrow's not shown there, but obviously we had a big correction all the way back down to the bottom of this support level here around 92. So again, this is the bigger picture of the US dollar index. Huge, biggest divergence in at least 2 decades, if not longer. And we had a thrust down, and as expected, we found support that we were very oversold when we came back down to the bottom of this trading range here. And we pierced it slightly, but we were just too oversold. That's the thing. You can't, when you break support, likewise, if on a rally you go up and break resistance, if you're extremely oversold when you break that support or overbought when you break that resistance, the odds that you're going to continue lower are greatly diminished. And so you get these little, that's what I call a momentum fueled overshoot. You had a lot of downward velocity going in there, overshot it and bounced. Now, with that being said, look at we're turning down right at the 50 level, that off axis resistance on the RSI. And again, my scenario for a long time would be that we'd ultimately go on to break down below this range and see more downside in the US dollar. That would be bearish for gold. If you overlay a chart of gold, asked you to do this on your own. I don't have one up right now, but you go back long term and you can see there is a very clear inverse correlation. At times there's some temporary disconnects, but for the most part, an inverse correlation between the US dollar and gold, meaning when the dollar goes down, gold goes up, and vice versa. So that's the bigger picture. And let's flip back to the euro. I just like using this euro US dollar chart to track it. So there's the that pattern. So this is just looking at that US dollar index chart we just looked at. Flip it upside down. So the bottom of that that range is the top of this sideways range, which plots the euro against the US dollar. And if you recall, after we broke out, it was in a tremendous rally. We broke out to the upside, but we were just too extended. We were too overbought, so I was favoring a pullback to come back in here and maybe test the top of this range. I didn't think we'd go all the way down there to it, and we didn't. We're close, but not close, not all the way down there. And I think there's a good chance that's close enough. So here's the good news here. I've already seen, or we're starting to see. It's a little too early to call it some evidence for reversal. I think this bounce or this corrective wave here in the US dollar pair may be over. I can see the indicators turning up. We haven't yet made a bullish cross, nor are we pointed up yet on the PPO. Again, this is a weekly chart here, but it looks like we're starting to. Remember, we had that big, powerful divergent low here, and so if this does play out the way I think it does, I'll tell you one or two scenarios. My preferred scenario, and I'm only slightly leaning towards it because we just don't have enough evidence to say that the correction's over, but I'm slightly leaning towards this, that we've now completed the correction. We're going to make the next thrust up. Otherwise, my alternative scenario, which again I favor this one, but not by not by a huge amount. But my preferred scenario, or I'm sorry, alternative scenario would be just a slight thrust down, come in, make a nice back test of the top of the pattern, and move on up. And now keep in mind that would also jive with the scenario that I've highlighted for a long time here, being a move down T1 bounce, hit the bounce target zone, and then move down to my final target zone before the correction was over. So that also jives there. But I was open all along to a reversal just shy of that actual support level. One reason is too many eyes are watching it, and that's with technical analysis of the markets. If everybody's watching the same level, one of two things are most likely to happen. You're either going to overshoot it to the downside and smash through it, or you're going to reverse shy of it. So that's that. And so far, what you can see, we've reversed. We're at resistance now. That's why you can't really say, okay, well, we're out of the woods yet. We'd like to see, first you want to see a break of this downtrend line here, especially if we get a reaction off it. That'll help to validate it. And then a breakout above this, the top of this target zone. That's a resistance zone now. And then, of course, if you take out those highs, I think it's off to the races. It's safe to say. And watch these trend indicators get flipped back into bullish territory here. Now, so that's a lot of analysis on the currencies. I don't trade currencies much. And from what I gather, a lot of you don't either. But it all plays into this. At the very least, gold has been a dead money trade. So hopefully, I've made clear that I've been disengaged from the metals and the miners. Over the last few months, you wouldn't have really. It depends where you bought it. You wouldn't have lost much, but you wouldn't have made anything. It'd be what I call a dead money trade, and that's just frustrating to be in. But with that being said, you can see that gold has held up. It's been pretty resilient despite the strength in the U.S. dollar, which is the weakness in the euro, and it's holding this support level here. So this may be one of those stealth rallies, because we're not really set up in any type of strong chart pattern. There's not a bullish falling wedge or any other type of pattern that looks like it's coiled ready to explode. So we could see gold just sort of mount a stealth rally at any point in time. But again, I'll be queuing. My cue will be to watch to see if we see some continued strength in the euro against the dollar. In other words, dollar weakness. And if that happens, then gold will start to play a game of catch up. So it would almost be nice to see that euro US dollar chart continue to firm up, euro climbing against the dollar, dollar falling without gold going anywhere for a while. Then we can start to jump in here and not miss that, that first, nice move and breakout above that previous reaction high. So there it is. I'm not in a rush because gold hasn't started moving yet, so we're not really missing the boat. And more importantly, I don't trade gold either. I trade GDX or individual mining stocks. And I do that because these are simply a leverage play on gold. If you get the call on gold right, you've got the call on GDX right. Even barring the short-term disconnects, GDX will track the metal, but you're going to have more bang for your buck. If gold goes up 10%, GDX is going to go up 20 or more. Depends, of course, at the time, but it rises and falls more than gold. So there it is. It's been dancing along this support level. You can see here. This chart doesn't look like a whole lot. I don't see a whole lot that stands out. And again, that's why I'm not eager to jump in just yet, but I'm watching it. You can see this little sideways trading range here. The top of that is resistance defined by all these reactions. Each of these lines are key levels. So really, we're between $23. Watch for a breakout above that would certainly be bullish, or the bottom of that range. I don't have that marked. Let me give you that number, 22, 28. We'll call it 22.25 to be safe. So let me remove that 22.50 line, which is blocking it. And all right, so that's what we're looking for. Just keeping an eye on it. Get ready. I'll tell you, if you're a long-term investor and you're patient, you could start scaling in here and have a stop not too far below. But again, if you're trading GDX, always keep an eye on the charts of gold as well as the US dollar to help either confirm or refute your analysis. All right, let's move on to the next one. Okay, usually start out with the broad markets, but I've been covering those so much lately. There's not a whole lot to report, although it is nice to see, so far that 153.85 resistance level is doing a good job of capping the advances. Yesterday I mentioned I think yesterday that may be the last last objective short entry on QQQ. So far, so good. If you continue to short up to the, short at this level with a stop not too far above, it seems objective. We gapped down today, so we're below there. That's another rejection off that level, but it's still anybody's battle, bulls or bears. The bears need to take out that previous reaction low, and the bulls need to take out the 153.85 level. And they need to do it on a closing basis, at least a 60-minute candle clearly above it, not just slightly above it, impulsive move, or a daily close solidly above it. And then, of course, you have that previous reaction high to contend with. So, as of now, nothing's changed. I know it's frustrating because this is playing out slow. Pretty much given up on that inverse, or that, I'm sorry, not inverse, but the head and shoulders topping pattern. That was just one potential thing. The symmetry on the right shoulder is a little bit mucked up now, but that doesn't matter because my you know price targets and scenarios still look the same. Move down to 151.26, reaction there, and a move down to 149.21. All right, so as long as this doesn't get taken out with conviction, and we break below there, it looks good. SPY 60-minute chart. There's that breakdown, hit of support at 256.18, the bounce, the back test, failure at both the on the back test of the trend line from below as well as that 258.39 level I recently highlighted. We gap down below, giving us so far a successful back test of that line. But that's a similar story to QQQ. We have the bears need to take out 256.18. And the bulls need to take out 258.39. Let's not make it any more complicated than that. Biotech starting to crack below that support zone here that I mentioned. Still, trend indicator is still just right up on top of that adjusted level I have down at negative 1.05, a little below the zero line. Went over that in recent videos, but we're still oversold, or recently we're oversold. There's a potential for some RSI divergence on the RSI, and then one of the other biotech ETFs, IBB, still has a very significant support level here again by all these reactions where I'm pointing right here, reactions here, reactions here, reactions here. So we're still uh, still above support and oversold. So I just don't think, personally, I'm standing aside the biotech trade, at least in any of these ETFs for now, for the time being, for reasons I mentioned in the video. There's some big components still at support as well. So although down today, and just from the look at XBI, it looks like we broke support, but I like to trade, if there are multiple ETFs for a sector, I look at them all, and you're going to I give the benefit of the doubt. If one's broken down, but the other two haven't, um, well, you might want to hold off on that sell signal. Likewise, I do that with the broad markets. If QQQ breaks support and SPY doesn't, well, you got to wait till SPY breaks down, the other large cap ETF. But when they both break support around the same time, that's a good sell signal. Likewise, when they both break out to the upside, that's a good buy signal. And one potential trade idea, try to throw at least one in all these market update videos, is GE. Just the market is puking up GE. This is the market trying to figure out what this whole restructuring with GE, how it's all going to shake out. I have no idea about the fundamental story in GE. I don't have the time right now to look it up, but I suspect we're getting close to the point where the collection of the sum is worth more than the whole. In other words, GE, they're going to spin off their railroad business and the light bulbs, I believe. Um, you have to, at some point, you reach that book value of the company where if they sell off all these companies, they have the locomotives and light bulbs and finance arms and everything else. There's got to be some value there. A lot of funds are probably having to unwind from here. But let's watch the PPO. What I'm looking at is we still have potential divergence. Now I cut through this line. This line can change. If we turned up quick, this line would move up. And so we still have the potential right now. We're stretching it, but we still have the potential to put in a divergent low here on the 60-minute chart, especially if we get a reversal. So you look for a candlestick reversal would be nice, but you can see that volume. Looks like a selling climax. There's certainly the market is puking up this stock, but again, this is GE. Here was that divergent high back in 2016. From that divergent high, after the stock peaked, it fell. The stock is down 45%. So again, sooner or later, um, and then we all know this, sooner or later there's going to be a short covering rally. Shorts that are in the stock know that when this thing turns, it's probably going to be, at least the initial pop will be pretty quick because it's so oversold. Think of a stock like a rubber band. The more you stretch that rubber band, the more it's going to snap back when it finally does. And so there's a little, you can see these reaction points here. This isn't solid resistance. I'm sorry, solid support, but it is support there right around that $18 level. So I started taking a starter position as long as those 60-minute divergences are intact. I'll hold, but I'm not going to add unless I see evidence of a reversal or I see those 60-minute charts firm up, confirm that divergence. By evidence of reversal, look for candlestick reversals. You can go down as whatever time frame you want. You go down to a 15-minute time frame, look for a bullish engulfing candle, look for a doji, any kind of. There's numerous type of candlestick reversal patterns, and I can say this: the farther you move out on time frames, this is a 15-minute chart, here's a 30-minute chart, here's a 60-minute chart. You go out down the time frames, all the way out here to a daily chart. Uh, the longer the time frame, the better odds you have that that candlestick reversal will stick. However, if you wait for a reversal, let's say a bullish engulfing candle on the daily, that might be up here. You might have this stock might be up to 19 and a half dollars. In other words, you may miss out on the first 5-6% before you get that signal on the daily chart. It'll be a higher probability signal than a reversal here on the 15, but on the 15-minute chart, you could engulf the current candle with just less than a 2% move. And again, that's just one of many things to look at. So um, trade, commensurate with the time frame you're on. If you're trading this 15-minute chart, you can see here if you want to get a quick bounce, there's some reactions right there. The stock's at 1809 right now. You can trade it back up to, I think, if it gives us evidence of reversal soon, I think you're good to at least that 1961 level, and that'd be a quick pop. That's a 8 almost 9% pop in the stock. And if you're trading on the daily time frame, well, there's a lot of work to be done, but I'd still be looking, for a pop back up here at least now at this point. And somebody asked the other day, what would my target be on GE? And I said that's all, it's relative to where it bottoms. The other day, you could have looked and said, yeah, all the way up here to 23 or so, just a few days ago or a week or so. Now we have a lot of reactions here. You can see this. This was flagging type action, so that's something else to point out on GE. You have a uh, bear flag continuation pattern. So if you take the measurement of this pattern here, we take this as the flagpole here. Let me move that out. Let me put a line right there. You take the impulsive move down, you go to the bottom of the flag like this. So again, let me put that flag back for you. See what I'm talking about here. There's your bear flag. This is the flagpole. This is the measured move. That takes us all the way down to about 17 and a quarter or so. But again, this is just a rough estimate. You don't have to hit this. You can exceed this. So keep an eye. If it drops another point, the stock will look very interesting because it will have met its measured target. But again, this thing could reverse at any point in time now. And you could, my point is you could swing trade it back up here now at this point to just below that flag pattern because there's a lot of reactions there. So that would call it, 1985 or so, somewhere there. All right, let's wrap up. This has been long enough. This has been Randy Finney with Right Side of the Chart. And if anything else stands out, I'll post that on the front page. Have a great day.